which I've not covered, is the price peak of the yellow cycle. That's really, really important information when you're trading, because after the yellow cycle has formed a peak, of course, the yellow cycle is going to force prices downwards. So if you can get confirmation really soon about a peak in a cycle, then you can make trading decisions on the basis of that. That's really useful. Now, let's have a look at one more upward pointing VTL. Price crosses down below the yellow upward pointing VTL at this point over here, which means that that is confirmation of a peak in which cycle, the one cycle longer than the yellow cycle, which is this blue cycle. So in other words, you would know that either this price point here or this price point here, in fact they are equal, so it's up to you which one you choose, but one of these two, and generally one chooses the second one for various reasons I won't get into now, but generally one chooses the second one if they are exactly equal, although in the market they're very seldom exactly equal. So this is then the peak of the blue cycle, which is the longest cycle over here. Once the blue cycle has passed its peak, you can start thinking about trading short. How much after the peak formed did you learn this? Well, you learnt it. The peak formed over here, and you learnt this valuable information only that much later. I don't know how many bars that is, but it's a short period of time after the peak was formed. Here the peak of the yellow cycle was formed, and we had confirmation about it, we knew about it that much later. All right, so that is the piece of information that VTLs give you. Now I mentioned that although there's only one piece of information, it is nevertheless important because it is more timeless than an FLD. Let's have a look at the FLDs here, and I actually need to correct the color coding of these FLDs. I've used different colors for the FLDs, which was a little silly. But the orange FLD is in fact connected to the pink cycle, and the blue FLD is connected to the yellow cycle, and the blue one is connected to what was the blue cycle. But let me just point out a few things here, and that is that when price crosses, I need to put a pin, when price crosses the pink VTL, we were provided with confirmation of this as being the peak of the blue cycle. When did the FLD provide us with the same piece of information? Over here, where price crossed down below that level. Okay? No, in fact, I'm wrong. I beg your pardon, because it's one cycle longer. It provided us with confirmation of that peak over here. Similarly, the story is a little complicated. There are a few other things I need to mention. Perhaps this wasn't a very good example. But what I wished to demonstrate to you was that after the peak is formed, the VTL always provides us with our first confirmation. VTLs are very, very trigger happy, if you like. They're very sensitive. They provide us with very quick confirmation. The FLD always provides us with confirmation a good deal later. I shouldn't say always, but in an ideal situation, FLDs always provide us with later confirmation. In a practical situation, sometimes FLDs provide us with confirmation before the VTLs. But generally, VTLs are more timeless, so they're very useful for that reason. So now let's have a look at Sentient Trader. If you have any questions about any of this, pop them into the chat window. Let's have a look at Sentient Trader and see what's going on here. Let's plot our VTLs. The first thing that should be immediately apparent to you is that VTLs have a point at which they expire, if you like, a point at which they're no longer important to us. After price has crossed a particular VTL, that VTL has given us confirmation that the trough or peak in question has occurred, and therefore after that point there's no longer really any reason in drawing the VTL, which is why VTLs will be on your chart 1 week and they will have disappeared the next week, because after they get crossed by price they have served their purpose. And they are what Sentient Trader calls behind the scenes an outdated VTL. It's an historical VTL. Sentient Trader, in fact, has a record of every single VTL for every single cycle that was generated over the entire analysis period, and it uses that to help rate its analysis, and it uses it to help perform the analysis back in time. But the VTLs that it plots on your charts are only the most recent VTLs, because those are the ones that are still active and are still either waiting to be broken, or if there isn't a new one that is waiting to be broken, it will continue to plot it on your chart so that you can see it and so that you can benefit from that information, such as the 18-month VTL that you'll see on this chart over here. Here is the 18-month VTL connecting this trough over here with I beg your pardon. It actually was connected. Let me zoom out and do this properly. It's connecting a much older trough. Let me zoom out and find that. There we go. That's actually the correct way of looking at it. And so here's the VTL, which is connecting this trough over here with this trough over here, two consecutive troughs of the 18-month cycle. And here is the 18-month VTL, which is extended through those troughs. Notice price touches it there. I'm going to come back to that in a moment. Touches it. But why hasn't that VTL been moved, you might ask? Because the low prices actually exceed below the VTL. Why hasn't that price been moved? Well, why hasn't the VTL been moved? Because that touch or cross actually occurred after this second trough over here. And price came down and touched the 18-month VTL again, which is something that often happens. And then over here, it decisively crossed it. Look at that. It crossed it. What does that tell us? That tells us that the highest price in the previous half of the cycle is, in fact, a peak of the cycle 1 degree longer than the 18-month cycle. What is the cycle 1 degree longer? Well, in this nominal model, the cycle 1 degree longer than the 18-month cycle is the 54-month cycle, a 4.5-year cycle. That is why, in the blogs that I've been writing, the ST Outlooks, I've been publishing them every 2 days, Monday, Wednesday, and Friday. I'm publishing an ST Outlook, and I make a commentary about the market. That's why I've been talking about how the markets are moving down. This price over here is a peak of the 4.5-year cycle, 54 months, 4.5 years. It's a really long time. So when people say to me, "What's the outlook for the markets over the next 2 or 3 years?" I tend to say, well, I believe that we have seen the peak of the current 4.5-year cycle. There it was. Back in May, 2nd of May, if I remember correctly. That was a peak of the 4.5-year cycle. The 4.5-year cycle is now moving down. It doesn't mean it's going to move down for 2.25 years, but nevertheless, if that was a peak of the 4.5-year cycle, and I believe it was, as confirmed by price crossing decisively this 18-month VTL, then we are headed for some bleak times in terms of the stock market. Prices moving down. Unless, of course, you're using Sentient Trader and are prepared and are taking short positions, which is what you should be doing. Let me come back to a point that I sort of made and drifted away from again, and that is how price tends to act around a VTL. Okay, and that is that there are a few things. I need to select this pen again. Okay. Price often comes down and touches the VTL, and the VTL forms what is called support. In other words, it supports the price. There's a perfect example of it happening over here. Okay. Now, many of us were holding our breath in August of last year, when in August of 2010, some Hurst analysts were holding our breath because we suspected that the July trough was a trough of the 18-month cycle, which we're now pretty confident it is, or was, and you can see Sentient Trader has colored in that diamond, indicating that it is also confident that that is a trough of the 18-month cycle. It's a solid diamond, whereas these ones here are hollow. As you can see, they're unconfirmed. And when price came back down so soon to that 18-month VTL, many Hurst analysts were holding their breath, because if price crossed down below it, that would have been a confirmation that we had already seen the peak of the 54-month, 4.5-year cycle. So last year, in August, in summer last year, many Hurst analysts were, on knife edge, wondering whether price would cross down below that. Looking at that, you might say price did cross down below it. In fact, it didn't, because remember, median price needs to cross down below the price, and although the low price crossed down below it on 3 or 4 occasions, the median price didn't, or if it did, it was such an infinitesimal cross that if you were drawing charts with a pencil, you wouldn't have noticed it, sort of thing. Perhaps I should speak about that soon. Anyway, price came back down to that same VTL over here, and as you can see, touched it again. That started happening in June of this year. I know myself. I started publishing SD Outlooks, and I was following the markets very closely on an end-of-day basis, and I was at knife edge whether price would cross down below this 18-month VTL. Bear in mind, this 18-month VTL we'd been plotting on our charts for over a year, so it was a level that we'd seen for over a year. It wasn't a split-second sort of a decision. It was something we'd been seeing in our charts for a long time. Price came down, touched it again, and then did what it often does of VTLs. It bounced right up off it. Okay. In fact, I have had conversations with some experienced Hurst analysts who use Sentient Trader, and they personally often trade moves where price bounce off long-term VTLs. There's a very good, a very clear trading strategy involved in that. But anyway, not much more to talk about there. So that's one thing to look out for VTLs, is that price often comes down, touches them, and then bounces off them. The other thing is that generally price needs to cross a VTL, what I call convincingly. And if any of you have read my commentary about gold, I mentioned that gold needs to break below the 1800 level in a convincing fashion. And this is what I would call a convincing fashion, what happened over here. That is convincing. Okay, price clearly crossed that 18-month level. Now, that cross had really, really important implications for Hurst analysts the world over, and I really enjoy communicating with people, even if you're not an expert. I'd be very happy to hear from you about your opinions of the analysis of the market. I love talking about analysis of the market. Send me emails. I do enjoy discussing it, and I often discuss the markets with people who have ideas about what's happening. And I was in communication towards the end of July as price moved down towards this 18-month VTL, and we watched this level very carefully. And of course, on the 2nd of August, I think it was, price clearly crossed down very strongly. On that day, we received confirmation that a peak of the cycle 1 degree longer than the 18-month cycle, this VTL is drawn up based upon the 18-month cycle, we received confirmation that a peak of the cycle 1 degree longer, which is of course the 4.5-year cycle, 54-month cycle, had in fact been formed in price. Where is it? It's really easy. The rule is go back over the last half a cycle and find the highest price movement. So, in fact, here it is over here. Hang on, let me just go back. We're talking about the 54-month cycle. So let's just identify that. Here was the last trough of the 54-month cycle, right back over here. So in fact, the peak of the 54-month cycle occurred right back here on the 14th of October 2007. If price had created a new peak since then, which it hasn't, which is another very important point, but if price had formed a new peak since then, we would, of course, call that the peak of the 54-month cycle. But in fact, the peak of the 54-month cycle occurred way back in 2007. Since then, price has been lower than that point. A factor that many people seem to forget nowadays when they talk about the markets. They talk about the fantastic recovery since the financial crisis of 2007. Well, yes, it's been a recovery, but I wouldn't call it fantastic. We haven't got up to previous heights at all, and markets are now distinctly turning down. So, So it's something to be careful of. Right.